Alright traders, I'm back again with another video, and this time today we're going to be talking about two live trades that I'm in. Looking at two trades that I just entered basically, and they were in there off of a fractal breakout. So we played the fractal break of a level to get into the trade. I'm going to show you those trades, and I'm going to show you where I expect those levels to go to. Now, before I get into that, I want to show you that I have a trading journal that I keep track of all my trades, and every time I open up a trade, I open up this trading journal and I'll log the information and save it. And then I have folders broken down into each month. So every month I have a trading journal month where I put the closed out trades. So for August or September or wherever, I put the closed trades for that year. So 2013 of August, all my closed trades will go into that folder. So I can go back in that folder next year or a couple weeks or months from now and look back and say, well, look how we were trading in August. Look at how many trades I won or lost, how my how I did in that month or how I did in this month. So you could see what months were best for you. You could find out a lot of information. But the most important thing is it keeps you disciplined. It keeps you doing the things that you're supposed to be doing. But you're only disciplined if you do these things. So basically, you can see my chart here. I mean my journal here. And what I do, I take a snapshot of the trade. So here's the snapshot of the trade. It's going to be the pound dollar, and I'm going to show you that that's the trade we're going to be looking at. So I take a snapshot of that trade once the trade is triggered. Now you can set your target, your levels like this. You can have your levels set, and before the trade is triggered, just take your chart and put the picture here on your clipboard and copy it to your Excel spreadsheet. And that's what I do here. Now you can see here's where I entered the trade, and I entered off of this level. This was the level. This is the candle. This is the level, and here's my stop loss right here. So I log all this information. This level right here, this is going to be my Tinkinson, my Kijinsen. So this is going to be important because I log that level. I want to see how far price is away from the Kijinsen when I get into a trade. The closer the better, but if price is too far away, like we know, we don't want to get into that trade because the market's out of equilibrium and it's not a good trade for us. Now when we took this snapshot and everything, we had made a profit of 19 pips at the time. So what we have logged here is the currency pair. You have your date and you have your time. I have these set up to open up automatically. I have them set up with uh, formulas that open this up. And basically, I have combo boxes right here, 4-hour time frame. I have the price versus the Kumo. So is it price above or below the Kumo? So it's above. It's bullish. You got your Tenkan-sen and your Kijin-sen. Is that a TK crossover? Is it bullish or bearish? And it was bullish. You got your Chico span versus price. Is it above or below? It's above, so it's bullish. Your Kumo future, your Kumo twist. Is it bearish or bullish? And it's bullish. And then your daily price versus the Kumo. So is the daily price above or below the Kumo? And it's above, so it's bullish. Everything is bullish, and we're in a long trade. All right. So if everything's bullish, why would we take a short trade, right? There's no need. So we got is it a Kumo breakout? No, we're not doing a Kumo breakout. TK crossover? No. And then we should have one more thing. Is I wanted to put in as a fractal break, and that's most of my trades will be that. And I'm going to probably open it up and change that and put fractal break on one of these cells. And then you got long or short. Is it a long or short trade? Then you got your Kijinsen value. So you got your Kijinsen value right here. Tells you where you are right there. You just put that in here. You got your entry price. So you get your entry price, what that is. And then this will tell you your distance from your Kijinsen once you put that in, because I have the formula there, which is that right there. There's my formula for that. So if you see that on the screen, you can copy that and make that yourself. And then, so here's my Kijinsen value. Here's my entry price. And then here's my formula for formulating the distance from the Kijinsen. Then I have my stop loss target, which is the price that I have my stop loss at. And then I have another formula to tell me exactly how far that is. So it's 22.1 pips. And then I'm trading with 10 lots right now. And then my exit price will give me my profit or loss in pips. And here's the formula for that. Now this is going to change based off of a few things. Is it going to be like, see, this is 5 digits. Some are 3 digits. Some have 2 or 3 digits before the decimal. So that'll change this a little bit. You'll have to If you do make this chart like this, you'll have to adjust that. But most of mine will be 5 digits, so I don't have to do too much changing things. All right, so let's get on to the charts. And basically, like I said, I'm trading the pound dollar. This is the pound dollar on a daily time frame. This setup is looking very good. Now, if you look at this price action here, this looks like a total mess. All right, so on the daily time frame, you wouldn't be able to get much from this looking at this, especially trading it. You could, because you wouldn't trade anything in between here. You need to break these levels to get set levels. I mean, trading this stuff is really, on the daily time frame, this would be tough to trade because you can see you got all these crossovers: TK crossover, TK crossover, TK crossover, TK crossover, crossover. But then if you take this to the 4 hour time frame, these all this zigzag stuff looks more like, you could see the trends more defined. But the thing we're looking at, we're just trying to find levels when we're looking at the daily time frame. We're not worried about that price action. We are worried about, is price above the Kumo. So is this going to be a bullish or bearish trade? This will let you see your levels, and this will tell you that we should be going long because we're above the cloud on the daily time frame. But we really want to get our levels, and our level that we're looking for next is this level, because this is the most recent resistance level, fractal resistance level, where we think the market will move to, because the market has a memory, so it wants to go back to where it was before. Now I could do this. I put a 1-to-1 ratio in here. I can put that in from here to here to here. So let's put that in to look at that. Now the 1-to-1 ratio, there's two areas that I would be looking at. If I went from there to there to there, my 1-to-1 ratio is going to be exactly at that support, at that resistance level, because we started here and we move all the way up to here, and then we retraced here. So then now this will set your expansion level. So your expansion level is going to be from here to here. Your 1-to-1 ratio is this, like this: A and B. So this will be A and B. So A to B, and then this level, the next point will be C, and then D. This will be D up here. So definitely looking at that, that's going to be a 1-to-1 ratio, 100% expansion level, and that's going to be right in line with that resistance level right there. So yeah, definitely that's going to be the level where we look to take profit, and then see what the market does when if it can break out of that level. And then if it can, then we shoot for this level here. Eventually we want to look for this level right here, right above this, right here, for the be a double top right here, and then we'll see what the market's going to do. But there's nothing really inhibiting us once we get past this level here. We need to get outside of this level in order to have a nice long trade. I mean long in terms of a long trending trade. Alright, so once again you could see the level here. Now this is the daily time frame. I'm going to take it to the 4 hour time frame and let you see this. So let's go to the 4 hour time frame. And looking at the 4 hour time frame, and here's our 1-to-1 ratio, here's our expansion levels. But looking at the 4 hour time frame, you could see this was going to be the level, because price moved up to this level here. This was going to be this was a resistance level, and it honored that level and bounced off, came down, retraced. All right, pretty close to 50% retracement, not quite. And then after that, price moved upwards. We had a lot of news today for the dollar, so there was going to be a lot of different. I waited for that news to be over and for the market to get back to normal, and then we traded the correction of the dollar. But really there wasn't much here, you could see that. But looking at this chart, this was very nice, because we have this TK crossover here, which is a very strong signal because it's above the cloud. So all the signals on here are bullish with a strong TK crossover, but we weren't playing the crossover, we were playing the break of this level here. Price broke that level, and you can see where we are now. Price is continuing upwards, 42 pips right now. We're looking to get to that level. Now if we make it up to that level, that'll be about 137 pip target, 135 pip target, and we can move our stop loss way up. Once we get to this level, we'll probably take profit, but when we get to this level, we want to see if price can break that level. But I think when price hits that level, we may drop for a little bit and then attempt to break that level again. Now on the break of that level, that'll take us on that long trade, shooting for that level that I showed you on the daily time frame, which would have been, looking at the daily, which would be this level right here. So if we once we get to this level, this is going to be an important level right here. All right, that's our 1-to-1 ratio, or 100% extension. uh, okay, so that's the pound dollar. Let's go to the New Zealand dollar. US dollar looks pretty much just like the pound dollar, because basically you can see this level here. This is the level that we're shooting for, and if we can break this level, then we can look for a longer run. Now there's only thing inhibiting us is Chiku span. Chiku span needs to get outside of this cloud here, needs to break this level here, because Chiku span could be inhibited by this resistance level here. Once we get past that resistance level and get through this, all this resistance of the cloud, then we can have a long, nice running trade. Now price will probably come up here, bounce off of this level, drop, and then attempt to go again. So if we don't break this level, the next thing will be to look to break that level later. But then once price moves downwards, then look for the entry, off of a level down here, off of a bounce off of your Kijinsen, off of the cloud bounce, off of the fractal break somewhere. All right, so let's go to the 4-hour time frame, show how we entered this trade. And here again we got a TK crossover, very strong crossover. It's above the cloud. TK crossover, bullish crossover above the cloud, strong signal. Now right now we're just looking to get to this level right here, and I got on this trade off of a break of the fractal, not the break of a fractal, but the bounce of the Kijinsen right here. So price came all the way down. Here was your news for the day. Price came down, and then it got pushed all the way down here. But then here's the correction after the news. Price started to move up. The bulls pushed this back up. So you had this long wick candle. Once price came all the way down here and left this long wick down here, my thing was to get into the trade off of the bounce, because this level was holding the bounce of this Kijinsen, and that's what I did. And now I'm looking to ride it to this level. I want to see what happens when we get to this level. I'm expecting to break this level, hopefully, because now this is the second attempt at this level, and you can see the first time we hit this level and look how far down we dropped. This is a strong level. You hit this level and you drop down that far before attacking it again. So we hit that level, what, basically on the 25th, July 25th, and now here we are almost a month later attacking that level. All right, so now we're at that level again. It took a whole month to get back to this level, and now we want to see what price does. Is price going to honor that level or violate this level? We'd love to see price violate this level so that we can stay long and continue to move our stop loss up and continue to move this trade all the way up to that level that I showed you, which will be right up here, looking at basically 85.80. Alright, so look traders, 4-hour time frame, TK crossover, strong TK crossover above the cloud. Your cloud is bullish, your price is bullish versus the Kumo, and Chiku span is bullish. There's nothing that tells us to go short on this market. Why would you be going short with all the signals that we have here telling us to go long? We would love to see price get outside of here. So all those signals, everything's bullish, and we're in a long trade, and this is what we're doing right now. We'll continue to monitor those trades. Maybe I'll try to bring that back and show you again later how the trades work out. But traders, hopefully this is helping you. And until next time, if you need any help, traders, just let me know. Other than that, may God bless you. So long.